Assalamualaikum, my name is Nur Anida binti Ahmad Tajuddin. My matrix number is 271352. In this task, we are select Scientific Berhad, Evergreen Fiberboard Berhad and Comfort Glove Berhad in industries, product and service. I will present economy analysis and industry analysis. Okay, first is economy analysis. In economy analysis, we will talk about monetary and physical policy. The COVID-19 epidemic has impacted major economy around the world, making for very challenging global economic situation in the year 2020. The term physical policy is used to describe the government effort to achieve the unemployment and maintain the price stability through change in the structure of expenditure and tax. Action like modify the interest rate, buying and selling government security, different level of cash reserve for all banks are contribute to maintain of monetary policy. Next is industry analysis. We will talk about growth cycle analysis. First company is Scientific Berhad. Scientific Berhad is a company that manufactures industry stretch firm. The holding of investment and the supply of management service are the two primary activities carried out by the company. Second company, we decide to choose Evergreen Fiberboard Berhad. This company is the front of the industry that produce engineering wood-based product. The last company is Comfort Glove Sdn Berhad. The company make and sell specially ergonomic glove made from both natural and synthetic material. The last one is competitors. Each of the competitors has their own strengths like lower price, better quality, and even better customer support. If the industry cannot keep up the innovation, they will push aside by other multinational companies. In conclusion, where they have a reputation for the innovation skill, premium quality, and variety product line, they are competing in other world's market. That's all for me. I will pass to the next presenter.
Assalamualaikum. My name is Muhammad Daniel and my metric number is 280454, and I'm going to tell about fundamental analysis, that is current ratio, quick ratio, account receivable turnover ratio, inventory ratio, and the last one is total asset turnover. The first one is current ratio. Current ratio describes the relationship between a company's asset and liability. So a higher ratio means the company has more asset and liability. Comfort Glove Berhad has the highest current ratio at 3.687, which means it could technically pay its of current liability 3.687 times over than Scientific Berhad and Evergreen Fiber Berhad, with Scientific 3.072 and Evergreen with the lowest is 1.632. Second is quick ratio. A quick ratio that is equal or greater than 1 means the company has enough liquid asset to meet its short-term obligation, means that Scientific Berhad have the highest quick ratio with 2.89 and the lowest is Evergreen Fiber Berhad with 0.869. Third is account receivable turnover ratio. A high account receivable ratio can indicate that company is conservative about extending credit to customer and is efficient or aggressive with the collection practice. It can also means the company customer are high quality or it's run on cash basis. The highest is Evergreen Fiber Berhad with 8.66, means that is the most conservative about extending credit to customer and is efficient or aggressive with its collection. The fourth is inventory turnover ratio. A high ratio implies strong sales or insufficient inventory to support sales at the rate. Conversely, a low rate indicates weak sale and lackluster market demand or an inventory glut. The highest between three is Scientific Berhad with 4.48, means that Scientific Berhad have a strong sales or insufficient inventory to support sale at the rate. And lastly is total asset turnover ratio. The higher the asset turnover ratio, the better company is performing, since the higher ratio imply that company is generating more revenue per dollar asset. The asset turnover ratio tend to be higher for company in certain sector than another. The higher ratio is Evergreen Fiber Berhad with 0.838, means that it is performing and generating the highest revenue per dollar amongst three. That's all for me. Thank you.
Hello everyone, my name is Lionel, matrix number 277309, and I'm going to explain about debt to equity ratio. So debt to equity ratio calculates the comparison between a company's total liability and its shareholder equity, and may be used to estimate how reliant a company is on its debt. So from the table above, we can see that Scientific Berhad have the highest debt to equity ratio at 0.76 compared to Evergreen Fiberboard Berhad at 0.37 and Comfort Glove Berhad at 0.26. A high debt to equity ratio indicates that a company is borrowing funds from others to support its growth, so Comfort Glove Berhad is the better company here. Next is equity multiplier. So equity multiplier is a leverage ratio that calculates how much companies' assets are funded by equity. So from the table above, you can see that Comfort Glove have the lowest equity multiplier of 1.26 compared to its competitors, Scientific Berhad at 1.76 and Evergreen Fiber Berhad at 1.37, which means that Comfort Glove is using more equity and lesser debt to buy assets. Since the company have lower debt, it is considered to be at a lower risk to investors to invest. Next is time interest earned. So time interest earned demonstrates a company's capability to repay its debt using its current income. Based on the table, all three companies have positive time interest earned, which means that they are all having profit. However, Comfort Glove Berhad is more favorable since it has the highest time interest earned, which shows a lower risk to investors. Next is net profit margin. So net profit margin is a statistic that shows the financial health of a firm by determining how much net income is achieved as a proportion of revenue obtained. The table above shows that Comfort Glove Berhad have the highest net profit margin at 0.30 compared to Syntax Berhad at 0.10 and Evergreen Fiber Berhad at 0.04. So it can be said that Comfort Glove Berhad is the most efficient firm at transforming revenues into real profit. Lastly is return on asset. So return on asset is basically a financial measurement that measures how profitable a firm is in proportion to its total asset value. From the table, we can see that Comfort Glove Berhad obtained the highest net profit margin, which is 0.36, outperforming Syntax Berhad at 0.07 and Evergreen Fiber Berhad at 0.02. This signifies that Comfort Glove Berhad is more efficient and in managing its capital to generate gains compared to the other two firms.
Return on equity is a financial ratio that demonstrates how well a company managing that shareholders have invested in it. Based on this table, Comfort Glove Berhad has the highest return on equity, which is 45%. It goes really far from the other company when the Syntax Berhad is 13% and the Evergreen Fiberboard Berhad is only 3%. Trailing price to earning ratio looks at the company's share price in the market relative in the past year earning per share. The market for price to earning ratio ranged from 20 to 25%. Therefore, from this table, Syntax Berhad can be considered as average ratio. Meanwhile, Comfort Glove Berhad is too underpriced. It is only 0.04. However, the Evergreen Fiberboard shows the negative value of trailing PE ratio.
Dividend payout ratio shows how much of dividend paid to the shareholders in relation to the total amount of net income that company generates. The average good ratio for the dividend is around 30% to 50%. The table indicates that Evergreen Fiberboard Berhad paid the highest dividend among the other companies. It is very preferable for investors to invest in this company. Price to book value ratio is a financial measurement to compare a company's current market value to its book value. It is used by the investor to identify the potential investment. So the table shows that the Comfort Glove Berhad has the lowest value at 0.2589 among other companies, which Evergreen Fiberboard Berhad at 0.4177 and Syntax Berhad at 1.2846. The price to book ratio can be described when the value is under 1.0. It considered a solid investment. Therefore, the Syntax Berhad is not a good investment because the PB ratio is exceed 1.0.
Okay, now I'm going to talk about estimate intrinsic value. So using dividend discounted model, we estimated that Syntax Berhad obtained an intrinsic stock price of 0.77 compared to the actual market price of 3.33, which is a difference of 331.35%, followed by Evergreen Fiber Berhad with an intrinsic value of negative 0.87, or can be considered as zero with an actual market price of 0.385, showing a difference of 144.31%. Lastly, Comfort Glove Berhad that shows the highest intrinsic stock price of 5.96, where its actual market price is only 0.455, which is a difference of 92%. Only Comfort Glove Berhad shows an intrinsic value which is higher than the actual market price, which means that the stock is undervalued. However, there are some downsides from using this dividend discounted model to estimate stock price, since in order for the calculation to be accurate, every stock needs to pay dividend. And there are some years where this company did not pay dividend. Therefore, this is why some stocks show extreme off value where it's being overvalued or undervalued. So next is free cash flow to equity model. So using this model, we estimated that the intrinsic stock value of Syntax Berhad to be 1.55. And from the year 2018 to 2022, the free cash flow of this company can be seen increasing at a steady average of 32.84 per year. This shows that Syntax Berhad is managing their cash available efficiently and managing to cover up all their debts, putting it at a lower risk for investors. Next is Evergreen Berhad, which has a 1.44 intrinsic share price. This is promising to investors since the actual market price is only 0.385, showing that the stock is undervalued. However, we predicted that its free cash flow equity to decrease at 1.29 every year for the next 5 years. This implies that the firm's income is barely sufficient to pay its costs and investment activities. Lastly, we forecast that Comfort Glove Berhad free cash flow to equity will increase in the upcoming 5 years. From the year 2017 to 2020, it has shown a positive growth of 82.33%, which is the highest among its peers. So its estimated intrinsic value is 0.13, which is considered overvalued. In conclusion, we recommend that Evergreen Berhad, since it is the only undervalued stock, although Syntax Berhad and Comfort Glove Berhad show positive free cash flow to equity growth rate, it does not always correspond to the amount paid to shareholder. Okay, lastly is to calculate PE model. We use the average value of stock price and EPS value for 5 years from 2018 to 2022. Okay, using EPS model, we estimate that Syntax Berhad have an EPS of 0.67, PE ratio of 2.71, and stock price of 1.55. Its peer, Evergreen Fiberboard Berhad, have an EPS of 0.06 with a PE ratio of 25.38 times, and its stock is valued at 1.48. Lastly is the Comfort Glove Berhad, where we estimate its EPS to be 6.16, PE value of 0.04 times, and its stock valued at 0.13. From this, we can conclude that Evergreen Fiberboard Berhad is the better stock to buy since it shows the highest PE ratio of 25.38 times compared to its competitors, Syntax Berhad and Comfort Glove Berhad. In addition, its estimated intrinsic value is also greater than actual market price of 0.385, indicating that the stock is undervalued and it's a good time to buy it.
So for the technical analysis for the three stocks, we are using the MACD indicator and relative strength index RSI to evaluate and forecast the stock performance. Starting from MACD for Sendex Berhad, it shows that the MACD line blue line has crossed the signal line red line, which is a good signal to enter the long position, and the MACD line has passed above zero, where it indicates a bullish market. Furthermore, the difference between MACD line and signal line is getting bigger recently. Therefore, it is recommended to purchase the stock. Next is Evergreen Fiberboard Berhad. It shows that the signal line, red line, has crossed the MACD line blue line, and both lines have dropped below zero, where it indicates the bearish market. Therefore, it is not recommended to purchase the stock. For Glove Berhad, it can be seen that the difference between the MACD line and signal line is getting lesser and almost cross the signal line soon. Therefore, it is recommended to purchase the stock and stay patient for the price to be increased in a short period. Since the RSI for Sendex Berhad, it shows that the value of RSI is above 50, which means Sendex Berhad is in an uptrend and is recommended to purchase the stock, even the value shows a little decrease in recent days. For Evergreen Fiberboard Berhad, it shows that the price is going stable. However, its RSI value is under 50, where it indicates there are more sellers than the buyer in the market. Therefore, it is not recommended to purchase the stock. For Comfort Glove Berhad, it shows that the price is going stable. However, its RSI value is under 50, where it indicates that there are more sellers than buyers in the market, but its value is better than Evergreen Fiberboard Berhad. Therefore, it is still not recommended to purchase the stock. In conclusion, we recommend to purchase the stock of Comfort Glove Berhad as it has the strongest fundamentals and it is predicted to be stable in the upcoming period through technical analysis.